Welcome everyone, I'm Robert Green, CPA and CEO of GreenTraderTax. Welcome to this week's webinar, August 16th, 2012. We're coming up against the tax deadline, so I want to do an update on Trader Tax, Form 8949 versus the 1099B problems, Forex tax treatment, and then have an update on investment management too. I'll be joined a little later on around 2 o'clock, 45 minutes from now, by Brent Gillett, the managing member of the Investment Law Group, and Brent handles investment management businesses. And we're going to have Q&A throughout today's session, so please raise your hand or text in your questions. As you can see from this email invitation in front of you, and let me just make sure you do see the audience view, you do. We're just going to touch on 011 tax returns. Many of you have already filed, but you may have filed with errors and realize you missed opportunities or made mistakes, and you can amend your return. So 011 is a tricky year with the cost basis, and what people don't realize is that all entities are due, if they're flow-through entities, they're due September 15th, which falls on the weekend, so it's the 17th is the deadline. Years ago, partnerships were due with individuals October 15th, but now, like S-Corps, they're due September 17th. That's really just around the corner. If you're one of our clients, we wanted to have your tax information before today because we need time to work through all the issues for traders, including the cost basis challenges. Now, a lot of times when you do this partnership or LLC or S-Corp tax return, you want to pretty much do your individual return too, because a lot of the tax breaks are reflected on your individual return, like the adjusted gross income deductions for the retirement plans and health insurance premiums and home office. So there's a lot of interplay between the two returns, and it's best to do them together. So for a lot of entity traders, really they want to have their ducks in order for the September 17th deadline. Now, we will have a few more weeks to file the individual by October 15th. You don't want to file entity tax returns late. In the old days, the penalty was $50 a month for one of the entities per partner. Now, it's $195 per partner per month. If you're in a husband-wife partnership, that's $390 per month. It adds up. So you don't want to be late. Now, with individuals, people got accustomed to maybe not having a penalty, or with a C Corp, figuring if I don't owe any taxes, there's nothing to base a penalty on, and there's nothing to charge interest on. It's charged generally on the balance due. That's not the case with the entities. The entities are not taxpayers. They're just tax filers, and the penalties charged no matter what. Now, as I pointed out in another update, I said that we might be able to, this is an excerpt from our tax prep and planning page, and I give a little bit more information about our deadlines and about the penalties. Actually, it's best right here. And I say we might try to go for penalty abatement, but we don't know how the IRS will react. If you are late because your broker just issued a corrected 1099 and maybe still hasn't issued the final corrections, and you're still struggling to understand them, and your accountant is too, it seems to me that's a reasonable excuse to be filing late. So if your entity is late, an individual too, we might have good grounds for penalty abatement, but there's never any promises with that. You need to file, you'll get the penalty notice, and then you seek the penalty abatement. You can include a cover letter with your return, but the process is to file, get billed the penalty, and then seek the abatement. States are very unforgiving. They're hungry for revenue. but the federal government tries to be reasonable, and I think at times they are. So you certainly don't want to have a return with 5 or 10 partners 5 months late. I mean, the penalties could be really high. Now, on the individual, if you have a big balance due, you're going to get charged penalties and interest. And if the balance due is more than 90%, they may find that you didn't make a good faith estimate with your extension. And we covered all that. We have resources on our website. There was a separate blog article about that. We really got into how those penalties work, what's a valid extension or not. So go back to that blog. But this is when that all comes into play, because it's the final return and the final numbers and when you file that you then look back to April 15th and see what the consequences are. Again, if it's an invalid extension, there could be late filing penalties and late payment penalties. So you don't want that. Now, there's also the 3115. If you've elected mark-to-market accounting, Section 475, in 2011, you went ahead, April 15th, 2011, you elected mark-to-market accounting. In 2011, you have a loss of $50,000. You're counting on that to be a $50,000 business ordinary loss, maybe a net operating loss carryback, or wiping out your other income. You're really counting on that tax loss insurance. Well, don't forget the second step of the mark-to-market accounting election, filing the Form 3115 change of accounting method on a timely filed return. If you file your tax return late after October 15th and include the 3115 late, it could jeopardize your tax loss insurance. You're giving the IRS a technical out. Now, we've been in communication with the IRS office in Washington. My partner, Darren Neuschwander, has. And he has learned from them that in some cases they may provide relief for reasonable cause on a late filed Form 3115, but there will be no relief on a late filed election statement. They feel the election is more important than the perfection. So there's a lot of nuances to mark-to-market accounting, and it involves IRS reaction. There's nuances to electing it, to revoking it, to suspending it. We're on top of all those issues. They have major consequences. For example, you suspend your trader tax status mid-year. You probably have to revert to the cash method, and when you reactivate your trader tax status, you must use mark-to-market. There's a lot of myths about it. There's a lot of confusion. Even IRS agents, even some of these departments in Washington, and we've been on top of it, communicating with them, so it's consistent and correct. That's beyond the scope of today's presentation. But we don't want you to file a late return thinking, hey, I have no balance due. There's no consequences. And the consequence could be that you lose your tax loss insurance on an 2011 election. Now, if you're not ready to file, we're going to want you to file that 3115 on time, because it goes to the national office and with your return. So we're going to do the best we can to not have to rely on IRS relief. So you have to come to us and discuss it with us early on. And we have to make decisions about what's best. There are some scenarios where filing late is okay. If you don't have an entity, if you don't have a balance due, no 3115, you don't owe taxes, it might work out. In a lot of years, there has been weather relief from hurricanes and tornadoes, and hopefully you don't need that relief, because then you're suffering through those conditions. This year, I haven't heard much about any of that type of relief so far. Keep your fingers crossed. Hopefully no one has problems. So that's the first point. And did anyone want to ask any questions about any of that? Just raise your hand or text in a question on the board, and I see a couple of questions. Let me make them a little bigger here. Good, so we have some questions, and I'm just looking at them now. TJ, is it always September 17th? No, the deadlines are always on the 15th. But if the 15th falls on a weekend or a holiday, then it's the following business day. Dennis, if I have income from a job and my wife has expenses and income as a futures trader, and we jointly file, can her trading expenses be applied against my income if they exceed her income as a trader? Absolutely. A trading business can generate losses, which include trades that have ordinary loss treatment under certain elections, and business expenses, which are ordinary losses. So if your spouse has a Schedule C loss from expenses, trading business expenses, or through a Schedule E from a trading business like a partnership or an S Corp or an LLC, absolutely that offsets any income on the return from either spouse. And if there's negative income, there very well may be a net operating loss, NOL, which is carried back 2 years, or you can elect to forego the carryback to carry it forward. And that's another point. There's other elections on a return that you want to get done on time. Some have to be timely made, others don't. So just don't think you can be late. You really look into it. Yes, this is being recorded and should be available after the session. From Boris, if a trading entity can and does make a timely MTM election, but does not file Form 3115, can that entity continue cash basis accounting? In other words, can the entity reconsider going to MTM and not file Form 3115? Boris, no. It's a tricky thing. You know, this MTM Section 475 process dictated in Revenue Procedure 9917 from 1999, and it's been updated as well. You make the election statement on time. It's not on a form. It's you just write it on a piece of paper. You attach it to your prior year return or extension, and you file it with the IRS. Now, if you do that, you're committed to it. The IRS does not allow you. So I think what would happen, Boris, is if you had a big loss and didn't do the 3115 perfection, you give the IRS a technical out to say that it prejudices the government, you didn't do it right, and deny you the ordinary loss treatment. But on the other hand, if they find it's in their interest to have mark-to-market, they'll push it on you, saying the election statement is what counts. And the IRS does this in private letter rulings. They apply the law in a way that they have the right to see what prejudices the government's position. It's very odd when you look at American law, but that's the way it works. So we do not allow clients to sneak out of it. Now, the way out of it is you elect mark-to-market accounting on April 15th, thinking you'll qualify, and maybe you do for that month, or you think you'll graduate from a trading school and qualify the next month. But when the proof in the pudding analysis was done at year end, we feel and you feel you don't qualify for trader tax status. That means you cannot use Section 475 mark-to-market accounting. So we don't think you need to perfect your election or go through the process of filing a second 3115, which is not an automatic consent and has a user fee of around $750 to revoke the election. Now, the IRS is a little confused about some of this themselves, and we've been forceful about this. So you elect, you qualify, you perfect. You don't qualify, you don't use, and you suspend. If you never qualified the first year and you didn't perfect it, you would have to re-elect the next year. It's not suspended until you file the 3115. I don't want to get too detailed here. I might confuse you. Ask follow-up questions if you'd like. Bob, I've heard about MTM. What is it? Well, let's take a look on our website, Bob. You come to our website. You click on the Trader Tax Center up there on the left, and then you look at the Trader Tax Guide Overview. These are all the excerpted chapters from Green's 2012 Trader Tax Guide with some other things at the bottom too, like foreign matters and global. No, actually all this is in the guide, and then the other stuff is below on the left. So you click on MTM Accounting, and you take a look at that, and it talks about the election procedures and how it works. And then you want more information, you go to the guide because there's a whole chapter on it and there's a lot of nuances. It's sort of what helped build Green Trader Tax. We got out and preached the message with Section 475 before the tech wreck. Congress passed these laws in 97. They were transitioned in 97, 98, 99. And if you elected it, you'd get ordinary loss treatment, not capital loss limitation of $3,000. This is the basics of trader tax, which we said we would discuss today. We recommend it for securities traders, not futures traders. Futures traders don't want to give up those 60-40 tax rates on capital gains with a lower long-term capital gains rate benefit. Securities traders don't get 60-40, so they like this 475 instead. What's ordinary loss, tax loss insurance all about? If your trading house capital burns down, you're going to get a huge check back from the government, most likely, if you've paid taxes in the past 2 years or the current year. And the premium is free. You're getting tax loss insurance on your trading house for free. For a futures trader, hey, the insurance is useful, but the premium is expensive. You're giving up 60-40, which could cost you if you have gains instead. If you elect mark-to-market as a securities trader, guess what? You don't have to file that dreaded Form 8949 with all these cost basis reporting problems that we talked about before. On this cost basis area, look at that screen. You're filing Form 4797 instead. Now you are picking up unrealized gains and losses at year end on business positions only, not your investments. If you want to buy and hold some stocks and you're trading, stock options or you're trading other symbols, you don't have to use mark-to-market on your segregated investment positions, and you have to carefully segregate them in form and substance. And the other beauty is because of the mark-to-market accounting, because it's economic, you get away from that whole dreaded area of wash sale reporting. That's how they messed up all those 1099s with the cost basis reporting. Brokers report wash sales differently. Every trader, they don't want to be bothered with wash sales. They are so inappropriate to apply those rules to active traders. Active traders are not really trying to game the system like the old Chicago pros did, where they had straddles, they constantly realized, sold before year-end the losses, and they rolled over the gains. That jig is up. Traders are really almost harassed by wash sale rules. Well, mark-to-market's your ticket out of it. If you want mark-to-market now for the rest of the year, very simple. We can form a new entity, and based on the new taxpayer exception, elect Section 475 mark-to-market within 75 days of inception of that new entity. Then your wash sale chain will stop as an individual. So there won't be any wash sales at year end if you're stopping those trades now, well over 30 days before year end. And then for the rest of the year, you can have mark-to-market. Or you can think about electing mark-to-market by next April 15th for a partnership or individual, or March 15th for an S Corp. So it's odd. The partnership extension is due April 15th like the individual, but the partnership return on extension is due September 15th like the S Corp, and the S Corp extension is due March 15th. So every year, say to yourself, how can I get into mark-to-market? Should I get into it? If you have a capital loss carryover, that's one reason not to jump into Section 475, because you need capital gains to use up your capital loss carryover. So you always say to yourself, I got this election date, March 15th, April 15th every year, but I also can set up an entity, a new entity at any time. If you have an existing entity, you could set up a new entity for a do-over. Getting into the right elections at the right times, thinking out the chess moves of the consequences, is one of the biggest areas of tax savings for traders. I'm talking huge money. There are so many traders that didn't get into mark-to-market when they should have, and they have tens of thousands or hundreds of thousands of dollars of capital loss carryovers that are wasted, maybe unused for a lifetime. And then there are others that make the wrong decision and pay taxes at too high a rate. Others who don't realize when they can get 60-40, 12% lower rates. That's huge money, that area. Now, the trader tax status then also gives you all the business expenses, and the entities give you the retirement plan and the health insurance premium deductions. So there's lots going on from different angles. Let's look at some more questions. And great, keep the questions going and raise some hands too. It'd be nice to hear some other voices. Let's see if we have any hands raised on the board. I don't see any hands raised. Let me make sure I'm going through it all. Oh, I see a hand raised. Hold on. John T., go ahead with your question. You have an open mic now, John. And he may not be, I'll leave his mic open when he comes back. He may have stepped away. Let's see who else has a question. John D. had a question. John D., your mic is open. So when you raise your hand, I'll open your mic, and when you're ready to jump in as prompted or like in between. Bill M. had a question. Bob G. had a question for a mic. I've given you the mic. So anyone speak up if you'd like to ask a question. And some of you, I've seen you also texted in your questions, but it's nice to hear from you. We can have some back and forth. So feel free. Go ahead.
Yes, this is John. I don't qualify for trader tax status because I have several businesses that I perform during the day, but trading is certainly one part of my business. So I'm guessing that this 475 election would not apply to me since I'm not, since I really don't qualify for trader tax status.
If you're correct, then yes, your assessment is right. Trader tax status is required for Section 475. But to go back to your premise, you can qualify even though you have other businesses and a job. There are many business owners who sit in the office. They just manage the business. They have a lot of people out in the field. They have good executives. They have other managers. And they're able to spend their time during the day in the markets while they manage their business. And they can qualify providing they meet our golden rules. And again, go back to the trader tax status section of the guide overview. Look at this and then go to the guide. And those who have the mics open, please don't type because we hear the type strokes. I can always unmute your mic if you want. So see if you qualify. I'd like you to hit our golden rules. When you're part-time, I almost think the bar is raised. So let's look at these golden rules. Trades full-time or part-time, all day, every day. spends more than 4 hours per day every market day working on his trading business, has few to no sporadic lapses in trading business, executes trades on more than 75% of available trading days, 3 to 4 days a week, makes close to 500 round-turn trades per year on an annualized basis, has proceeds in the millions of dollars, unless you're trading very low turnaround things like derivatives. Makes mostly day trades or swing trades, has the full intention to run a business and make a living, has significant business tools, education, business expenses, and a home office, has a material account size. You can see that there are many executives, business owners, who can meet those golden rules. Now, we don't consider automated trading when you use outside canned software to count or outside money manager. Now, if you have a trading company and you hire a trader to help you, that can qualify. Retirement plan doesn't count either. We've worked on this continuous business activity standard, and we feel it can buttress the frequency of trades. These golden rules are a lot based on the frequency of trades, the math game. Read that chapter 1. It's a big chapter. There's a lot of nuances. If you're part-time, definitely consider an entity, because then the IRS doesn't see your other activity and you look like a trading business. So if you have a follow-up, go ahead with a follow-up question. Otherwise, those who I open the mic for, jump in. I'm also going to look back on the board. Who has the next question?
Hi, Bob. This is Bill Moeller.
Hi, and you may not want to use last names because it's a recording and you may want to be anonymous, but that's fine. Go ahead, Bill.
All right. Bob, I've used the 89, or actually the TradeLog software, and just for what it's worth, it's excellent. And I've used your service just for my information to provide the data to my accountant for the last few years. This year, of course, I'm kind of beating my head against the wall before I send stuff out to the accountant, so I'm not sure how to address the footnotes for the 8949s. Are you, or have, oh gosh, is that it? Have you?
That's it, and I added it yesterday to our securities examples guide.
Okay, that's what I was asking about.
Yeah, we'll look at this note together, and you can comment on it with me, Bill, as I go through it. And thank you very much for using the TradeLog software and our service. We appreciate it. We value all our clients. And this footnote's important because the IRS is going to see this adjustment at the bottom of the 8949. This is the key part about the footnote. Above, we had to set it up for the IRS. Can you see this okay, Bill? Read it on the screen.
Oh, yeah. Yes, I can.
So, I'll just read it through. Many taxpayers have been finding errors on their Form 1099-Bs and have been requesting their brokers to correct them. While many have received corrected 1099-Bs, some brokers have not provided corrections yet, as it might require a major adjustment to their tax reporting and accounting systems. TradeLog provides a feature to reconcile Form 1099-B totals, proceeds, and purchases, although it does not provide the means to reconcile Form 1099-Bs on a line-by-line, trade-by-trade basis, and the latter is called for in Form 8949 instructions. Without line-by-line reconciliation, if the broker-provided Form 1099-B is incorrect or incomplete, Form 8949 cannot be fully reconciled with it, especially if the results are based on different IRS requirements for the taxpayer versus the broker supplying the 1099-B. If TradeLog finds a difference with Form 1099-B cost basis, it enters one or more line items for adjustment to reconcile difference between accounting software and broker-provided 1099-B on the 8949. Now let's set this up a little bit more. The IRS is going to look at a Form 8949, and they're going to see the correct trading gain or loss reporting on a line-by-line basis prepared by TradeLog, where TradeLog downloads the raw data. And that's correct. Now, the brokers have sliced and diced the raw data and made all these adjustments that they felt that were needed for the cost basis reporting regulations, and many of them struggled, botched it. They adjusted short sales to purchases, or when they should have done it to proceeds. They adjusted wash sales to proceeds when they should have done it to purchases. They've reported potential wash sales rather than actual wash sales. They've reported wash sales based on rules for brokers, which are apples, versus the rules for taxpayers, which are oranges. Taxpayers have to do it based on securities and options. It's a mess. Why did the IRS come out with cost basis rules? They want to see the cost basis, and they want to see what the brokers give. They want to see that. So they have the 1099, and they're going to see it. And TradeLog will reconcile to the totals of the 1099 only. It does not have the current means to reconcile to the details. And even if it did, it would just be hodgepodge. So at least we're telling the IRS we did the best solution available. We did a total reconciliation, not line by line, and we explain all that above why we didn't do it line by line. That's the key point. Now, this adjustment, which could be millions of dollars from some traders from botched wash sale reporting, the 8949 is going to match the 1099 because the adjustment makes it match. So the IRS computer should not get all up in arms. But then when the IRS sees this large adjustment number right on the 8949, they go to this footnote to understand why. So let's look. I cut to the chase before at the bottom, but let's look at the footnote. Tax return footnote, 2011, Form 8949 and cost basis reporting rules. We say taxpayers files a Form 8949, which accounts for new IRS cost basis reporting rules required on securities brokers issued Form 1099-Bs. As an active trader, taxpayer has hundreds, if not thousands, of securities trades, and compliance with the cost basis reporting rules is a major undertaking as described below. This footnote is intended to explain how taxpayer handled the compliance on Form 8949. So first we explain that the accurate reporting is a responsibility of the taxpayer, not the broker. You know, the IRS continues to place the burden of accurate tax reporting on the taxpayer, as is evident by the requirement for brokers to include a reminder to taxpayers that this is what brokers tell you. Taxpayers are ultimately responsible for the accuracy of their tax returns. So, and then it said, since it's impractical to require that financial institutions be responsible for tracking all possible events and taxpayer-level elections that affect basis, financial institutions should be treated as passive repositories of basis information rather than guarantors as to its accuracy. Now, this dovetails with my new blog today. Actually, I wrote this around the tax extension deadline after interviewing one of the major banks. I don't want to say their name, but I just didn't publish it until today. But this is same point. The major Forex dealer issues a 1099 for forwards, treating it like 60/40. But the client didn't elect out of 988. So the client wants ordinary loss treatment to the tune of hundreds of thousands of dollars. So this new blog that just went out today, look in your email for that. It explains the same concept that 1099s don't dictate tax treatment. And I give an example footnote to use for that Forex trader. So back to the 8949 one. Bill, you're on page with this, and you've been waiting probably for this footnote. I'm sorry we had it delayed, but the reason we delayed is, and the reason we have a bottleneck this year, and the reason why the email today was it's not a sold out sign, but it's kind of telling you that it's late in the game. You can consult with me, but you can't get into our tax prep team so easily. We're really busy. We had a bottleneck because we We had to hold. We had to wait for IRS relief. We had to wait for adjusted 1099s. We had to wait for someone other than us to address this insanity. Yeah, we've gotten the AICPA's, worked with the IRS. My partner, Darren Neuschwander, is on that AICPA task force. But the IRS is slow to act. They're going to wait to see this disaster on the returns, and then they're going to see what comes up in audits. And we don't want our clients to be the guinea pigs. So we'd rather file late. Let the guys who file early, they're the early bird gets the worm. Well, guess what? The IRS eats that worm. So if you filed early before a corrected 1099, you can expect an audit notice. And could you imagine an audit on these issues where the IRS agent wants to look for wash sales and spend a month doing it? I think that's a ridiculous waste of government resources and outrageous. But it could happen. So we told the IRS, taxpayer use TradeLog software, which calculates wash sales according to IRS publication 550, whereas brokers do not. TradeLog does it right. Brokers do not. We just said above, brokers are not responsible. The taxpayer is. TradeLog's doing it right. And we explained how it's the most reliable and what it does and how it does everything right. So, and then we explain how all the brokers are issuing the incorrect 1099-Bs. So great. At the end of the day, you can see this adjustment summary. This is the best you can do. It's not, we're pushing TradeLog and some other providers too to do the line by line. And hopefully next year we're going to push the industry to have better solutions, and we're going to push the IRS to recall and fix the rules. This is not acceptable to us. But we are doing the best we can under these circumstances. And we want our clients to sign acknowledgement letters about this type of disclaimer in footnote 2. We don't want a client to say to us, hey, Bob, this wasn't perfect, and you're responsible. We're doing the best we can with the solutions available to us. Does that make sense to you, Bill?
Yeah. This footnote, would this be something I could send along with the...
Yes.
Okay, good enough.
You have your TradeLog will make the adjustment.
Right.
And you attach this footnote, and it's in the Securities Examples Guide. So you come back to our website, and you go to the home page. For all those who don't know it, you see this free stuff up above, like the Trader Tax Center, other highlights, the services here on the right. But then you just keep scrolling down. One second. You scroll down, and you get to products at the bottom. And then you get the guides and the software. So for the guides, you click on the guides page, and you maybe get the gold package or the premium package or on promotion. That includes the Securities Examples Guide, plus all the other guides. The Securities Examples Guide is this one. So you can, instead of buying it for $49.95, that's not on promotion, you get the whole series of guides for $79.95, and it's right up on top of that guide. Now, to do the TradeLog accounting, you come back to the website, you scroll to the bottom, click on TradeLog, and then you click from our site over to TradeLog, and you see how it works with your supported brokers. And you can always do Excel imports if your broker's not on the list. With CSV or some other import, you can export from the broker into Excel or Quicken, and you can make it work that way. You can almost always make it work on downloads. Don't wait too long to do it. TradeLog has a lot about the 1099-B reporting problems, on the problems you'll find with the different brokers, Schwab, E-Trade, Fidelity, Interactive Brokers, Options, Express, Penson, TD Ameritrade, TradeStation, and there's lots more of known problems. And then when you come back to our website, let's say you're doing TradeLog and you're just not sure about it. You want us, it's just too much to reconcile, to figure it out. You're seeing errors. Then you sign up with us for TradeLog accounting. And our Christy Cam CPA is doing that full time. And our other CPAs are doing it as well. Amanda Smithson and others as well. And they're CPAs. So you want to get the help from a good CPA firm who knows trader tax. That's us. I think it's worth it to do this, but you can't come to us last minute this year. We're tied up. Our first job always is quality control for our clients. Now, I had a lot of marketing set up with other partners, Ninja Trader, Day Trader University, T3 Live, Cyber Trader, Rockwell, DTI. That's just a partial list. There's some other key ones that I just left off. I put them off until November because I don't want to just get all these new clients knocking on our doors when we're focused on handling our bottleneck. If you're a client, we're loyal to you. Get into us right away. Don't delay anymore if you're a returning client of any kind. If you're a new client, call customer service to see how we can help you. Now, you can use TradeLog on your own. You can use our guides, and you can consult with me. I am not on the tax preparation team anymore. I'm not doing that every day, all day, so I left the team because you need to do it all day, every day to be the best at it. I'm great on all this trader tax stuff, but I might not be as up to date as all the others on the rental properties, the vacation homes, and all those quirky little things. So I'm free to help you in a consultation. I can form your entity. But if you want to get in with my partner, Darren Neuschwander, you got to get in by the right time and by our internal deadlines. Darren runs a real tight ship, and he's unbelievable. And there's no way I'm going to stress him out with too much new sales. So that's a problem this year. We're sorry about it. It's not our fault. We think it's the IRS's issue. The brokers are overwhelmed. Everybody's overwhelmed. Every time Congress fools around with all these rules, they don't understand it's an employment act for accountants and lawyers. How is that productive for the economy? And we don't just take on new staff that's not highly trained. We don't farm out to India. We only use the best CPAs that have been with us a long time. There's just too many nuances and things at stake here. Bill, did you want to jump in again, or anyone else with the mic?
No, that's good. I will comment that the assistants at TradeLog, I mean, I had a couple questions, and I went through via email, and they were very responsive very quickly. So I had just used TradeLog for the first time this year. So
yeah, what's nice about TradeLog, unlike some other companies out there who, by the way, don't do it right, don't do wash sales right, don't do taxpayer reporting, they're broker-centric. There's really no other competing product. But what's great about TradeLog is they have customer support, and it's free. Now, they used to have the 800 number everybody called. Now I think they want you to get in the queue with email too, but they're fantastic with support. But don't call them on September 15th. Call them this week. This is the email I sent today, the webinar today is the alarm. It's time. The bottleneck is open. We've opened the floodgates. We're going with the best we have, and now is the time to get it done. So that can't be understated. And notice my partner, Darren Neuschwander, is not on this call. He normally would be. He's not on it because he's running this business with we have like 20 CPAs, tax attorneys. He's running a tight ship. So when you speak to our CPAs, be efficient. We send emails, do what we say, we do what you say. There's no time for fooling around and inefficiency. And what's great about traders is that they're efficient. Many of them are engineers. They're the type of people who do their homework, read our content, stay in touch, and we get stuff done efficiently. Now, who else has a question? Jump in. Bill, thank you so much for that back and forth, and I appreciate the nice comments. That was a big help. Who's next here? And Bill, if you have trouble finding the footnote, it's right on top of that securities guide page. Just contact Mindy.
Okay.
I might give it to TradeLog too. We have a separate footnote that we use for our tax preparation clients. It's a little differently, and we have a different acknowledgement letter too. But it's essentially the same thing. But this one's meant to be used by people on their own or with their local accountants. Remember, we're ready to help you and your local accountants too. You don't have to become our tax prep client. We want to help you whichever way is best for you. We really respect your local relationships, but we don't think that you should get trader tax advice from someone who's not qualified to give it. So carve that part out for us. CDR on the board. Are your tax manuals up to date for one to purchase? Absolutely. Every year we come out with new guides. One of the leading publishers interested in publishing our annual guide. So this is the 2012 guides. If there's a major update, we do it on the guides if there's something new. So yes, these are the latest guides. For example, you purchase online access until next mid-February. Well, yesterday I added that key footnote, and that was just what Bill was looking for. All right, so Bob, if you want to ask the question, Bob, by mic, go ahead. Otherwise, I'll read it on the board. Keep raising your hands, everybody. I'll go back and look and open the mics. Bob's question, TradeStation still does not have 1099s for 2011. Can you believe that? And some people are filing as an entity, and it's due September 17th. I mean, it's unbelievable. Back to his question. And did you want to speak up, Bob? Okay. And has no idea when it will be finished. I know my P&L from my monthly summaries. I will be filing before September 15th. Should I include a note with my return stating TradeStation did not get me a 1099? Absolutely. You should use TradeLog, and you should take our footnote that we have in the guide, run it through OCR to go into Word, modify it to say that no 1099 came at all. Unbelievable. I don't think you should file your entity late and have late payment penalties. The key thing is you're filing the correct numbers with TradeLog. I don't think you should use the P&L that they gave you. I wouldn't trust that. I would use the TradeLog. Mervyn, go ahead, Bob.
For what it's worth, TradeStation is my issue too, and I even got up to the manager level. He told me day before yesterday they have no idea when they're going to have the 1099 corrected done. For what it's worth.
Yeah, you can imagine how they're struggling. And I got news for you. The word corrected is a misnomer. It won't be correct. It won't be correct. They will get rid of the egregious errors. They will fix a lot of things, but there still will be problems, and there still will be apples and oranges. So they haven't decided to bite the bullet yet. You know, we first of all, I put the hold returns. I told accountants around the country, if you file on April 15th just based on a 1099, I think it's malpractice. I don't think accountants they're going to use the easy way out. They're going to say, and Darren got word from this through the industry associations too, the accountants are just going to say, hey, I relied on the 1099. You know, why can't I do that? So there is some software that just does that. It imports the 1099. How could you import and rely on something known to have so many errors in it? That's irresponsible. So I put the no filing block up for the whole industry, but I took it down very recently because now there's no choice, and I don't want clients getting penalties. So we go with TradeLog. We explain the problems because you want to know something? That 1099 is as far as I'm concerned, it's mostly meaningless. In the old days, it was great. It just gave proceeds on stock, and we really could reconcile to it. It was clean. It was simple. We reconciled to the proceeds. If we had more proceeds, hey, it was because the client traded options, which wasn't treated as a covered security. It was basic. It was reconcilable. It was useful. Now it's complex, unreconcilable, which makes it worthless. We can't even do the old reconciliation we can do, so we're out on a limb, and that makes me uncomfortable. We're using TradeLog. We really believe in it, but we also like to look at it and kick the tires on the files and get a feeling for it. And TradeLog's doing a great job. Listen, the TradeLog version on April 15th, we ran it for a few clients using the cash method. We ran it with a later version, and it was different. there were some kinks. So that's why we didn't rush to file April 15th. So we're all doing the best we can. And TradeStation just doesn't want to be embarrassed. They don't want us and TradeLog saying how wrong they were. So what are they doing? They're not doing anything. Now, I'm working with leading brokers that are some that we work with. And I've been trying to get them to own up to this. They won't own up to it. They punt it. They don't want it to be bad for business. They're not owning up to it. I hope they do. Mervyn, and anyone else jump in? Again, follow up on this point. Let me see about the list here to see if there's some other hands up. Again, just raise your hand, everyone. Once I give you the mic, make sure you keep the low background noise. Some of you put your hand down. J.M., I just gave you the mic too. John D has the mic. John T has the mic. Okay, so if you want to speak up, people, just speak up. Otherwise, get your questions on the board. And this is great. This is what I wanted today. I wanted FAQ. I wanted last-minute help because we're all facing the same issue and other issues. I don't know if Brent Gillett has joined us yet. Let me take a look to see. I see Brent Gillett's on the call. It's 2:07. We have more questions we're going to come back to, but let's turn to Brent Gillett for a second for a little break here on all this. We got a lot of questions, and we'll go late today to get these questions in. And stay on the call because you can also have back and forth with me. Brent, are you there?
Yes, I'm here.
Hi, this is Brent Gillett, the Senior Managing Member of the Investment Law Group, and Brent is handling the legal services for hedge funds. And, hedge funds have some of these problems too. They get 1099s, they have accounting, they have administrators, they have tax returns, and they got a lot of investors that they're responsible to. You can imagine they don't want to have egg on their face with investors. A lot of hedge funds have prime brokers, they have good administrators. They're not waiting for 1099s to do accounting. They're doing it throughout the year. So, Brent, you're welcome to comment on some of these issues if you'd like, but otherwise, Brent, what's been going on with you lately with hot button issues?
Well, I think everyone's still waiting for the SEC to promulgate new rules as was mandated by the Jobs Act with respect to everything from, the crowdfunding to easing the restrictions on mass marketing, against mass marketing, Reg D offerings to the general public. And Mary Shapiro, I guess, is not real excited about these new laws, and so she and the agency seems to be dragging their feet and complaining that they don't have the resources to meet the deadlines imposed by Congress. So, we're still kind of in a wait-and-see pattern, and there are lots of fund managers who are sort of on the edge of their seat, excited about the potential to be able to mass market their services to accredited investors. Currently, under current regulations, if you are raising money for a hedge fund or any other kind of business through which you are conducting a private offering, you're not permitted to use any kind of general solicitation or advertising to raise money. So there's no internet marketing, no radio ads, but all of that could change, and so we're eager to see what the SEC is going to come up with in terms of new rules. So that's one big area. Not a lot of we had a lot of major changes with Dodd-Frank, and a lot of the states adopting and changing their regulations to coordinate with Dodd-Frank, and some of that's still going on. For instance, Connecticut recently revised its rules to actually enable certain hedge fund managers to be exempt, whereas you used to have to always register, so that they would coordinate with the federal rules. So there's a lot of state changes at the state law level that are occurring now. But that's
well, Brent, Brent, when you change the federal rules, it can affect the state rules. And when you change the federal rules with Dodd-Frank and then you wait for the promulgation of the actual rules and there's blowback and then new elections and maybe reversal, and it gets to be a bit of a mess, and it can get very confusing.
Yeah, it can, because a lot of the state rules reference old federal rules, and you really got to dig into the statute and do your homework to make sure you get it right. Some other interesting areas that you've been involved with. We have clients who, well, a client that was involved in launching a proprietary trading firm, and there's questions as to whether or not they need to be licensed with a broker-dealer. There are lots of websites out there now inviting individuals to learn how to trade. They're educational in nature. I think there's a lot of uncertainty as to whether or not some of these firms should be registered as investment advisors. Most of them are not, and some of them even set up LLCs that they capitalize and advertise that they will provide their students with capital to trade. And so I know that these many of these firms are unregistered, and it's very much it's unclear now as to whether or not they have to register. So that's another kind of area that we've been looking into. There's a lot of first loss capital providers that will provide individuals with leverage on a private basis, not through Reg T or margin that like a broker dealer uses, but essentially, if you're a trader and you say you post $100,000, some of these firms will provide you with $900,000 more. So you get, in essence, 10-to-1 leverage, private capital, and it's not really a loan. You're not paying interest, but the $100,000 that's posted would be first loss capital. So there's a lot of these first loss capital programs we've looked at. Clients have asked us to look into on their behalf, and so that's it will be interesting to see where the SEC lands as far as whether or not they disallow unregistered firms to continue to operate in this manner.
Yeah, I have a major article on prop trading firms and some of these issues, Brent, coming out in Active Trader magazine in a month or two. Maybe we'll get it up on the blog sooner. We should do a webinar about prop trading. And one of the partners that I deferred the marketing for, T3 Live, they're a prop trading firm outfit, and they wanted to co-sponsor something with us. So let's try to put something together for that, Brent. So what else is going on, Brent?
And then we still have, the Forex traders are still frustrated, many of them, with the FIFO rules and the leverage rules, and we still, from time to time, are asked by individuals if it's possible to set up an offshore company, and we just don't. You and I have talked about this in the past. It's something that we're not comfortable doing, and there's just a lot of uncertainty still as far as the ability for U.S. persons to trade with non-U.S. brokers, and we're basically taking a conservative position that we don't want to aid and abet that kind of activity. So we've actually had a couple of questions recently about that.
Well, Brett, there's something interesting there that I want to talk to you about. The others should find this interesting. We have a big foreign initiative here at GreenTraderTax, Green NFH. We have a lot of clients with foreign issues, and we have CPAs trained in all that. International tax attorney Mark Feldman trained in all that. And Deborah King told me today, she said, Bob, we have a lot of clients, a lot of Americans who want to trade all around the world. Let's say there's changes here in America with, HFT or financial transactions tax, or just more regulation, more problems. And they want to trade, at night. They just want to trade foreign markets. The whole world is a trader's oyster now. Well, collateral damage from all Dodd-Frank and all the heavy-handedness of the U.S. government with FATCA and other regulations is a lot of foreign banks are saying, listen, you're American, we don't want you. We don't want you. You come with the whole American SEC, CFTC. They're constantly moving the goalposts. Look at, with Standard Chartered, the regulators. What they say is legal this year, they then change it to it's illegal the next year. We don't want that. We just don't want American clients abroad. So what Deborah pointed out is that a lot of Americans are going to want to set up offshore entities. Now, we worked with a client this week who has an offshore trading company, check the box, disregarded entity. So it's just like filing a U.S. husband-wife partnership tax return, but he put the software into a software company, a controlled foreign corporation that's not a disregarded entity, and he'll build up software. It won't be passive because you can't get deferral out of passive. It will be active, and you need boots on the ground to have active, but he'll get the benefit like Apple and Google and others. And we have, like you said, Brent, a lot of prop trading firm. There's a lot of American prop trading firm entrepreneurs. They may be Indian American, Chinese American, Russian American, just here a long time. They have opportunities around the world to open offices with traders sitting in India, China, wherever, working for peanuts and thrilled to make that money, who can then make money for the firm, trading the firm's capital. So, yes, Brent, I put the kibosh on the Forex trader. We said, because the enforcement officer of the CFTC told us, Americans can't use dummy corporations to skirt the 50-to-1 rule for retail off-exchange Forex for Americans. So we're not going to do that. But if a foreign bank or broker turns down an American and it's fully legal for the American to open with them but can't, but can do it with a controlled foreign corporation, then we'll set that up. And again, if it's a trading business, it's passive income, like royalties. Now, PIFIC, passive foreign investment company rules are similar and analogous to the CFC, controlled foreign corporation rules. So bottom line, if it's a trading company, you're not getting any deferral. It's going to be probably check the box and just file in the U.S., and we don't necessarily want a foreign partnership. We want very few foreign forms. And I'm touching on this today. Brent, you and I and Deborah and Mark, we're going to do this in an upcoming webinar, because I don't want people to think the world is not their oyster. It is. Traders need that. If there's ever FTT, financial transactions tax, they need to have their flight capital move, and they want to do it in safe ways. So again, you'll never break any tax rules. We'll try to keep it simple. You won't break regulatory rules, but there are opportunities. And Brent, so that's good to hear that you're also working on all that, and I know you are. Did you want to say anything else, Brent?
I think that from a regulatory overview, there hasn't been, just in the last couple of months, anything really new to discuss. We've just been staying busy. We're setting up a lot of incubator funds and RIAs with the new rules. We've been quite busy deregistering firms with the SEC and establishing RIAs for clients at the state level. So that's been where most of the activity has been. But not a lot of regulatory updates to report today.
Well, Brent, I look forward to the coming weeks where we do some investment management webinars, more on the incubator funds, and we're going to have a joint webinar where we feature what you do on the legal side, what your affiliate does on the accounting side, what we do on the audit and tax side, and how it is synchronized into a great full-service solution for clients. And people are gonna meet our professionals, and that's going to be exciting. And we're going to do that soon. So, Brent, I got a lot of questions on the board here. Some may be for you too. So if you want to just stick around, I'm going to look for any investment management questions on the board for you. And anyone, if you want to raise your hand to ask Brent a question, please do so now. Let me look at the attendee list to see if there's new hands raised. So if you have the mic, just speak up, everyone. If you want to raise your hand to ask Brent a question, raise your hand now. And I'm just scrolling through to look. Get your questions on the board for Brent as well. If I don't recognize your mic, get it on the board too. And We have a lot of questions on the board. We're going to get to them. Just looking at some of those now. Let me scroll to the bottom to see if there's any for you, Brent. I see a lot of tax questions. So, Brent, we're probably done with your side of the webinar today. I just wanted you to touch base with everyone, to give the hot button and just to say hello. And I was
sure. Thanks, Bob. And I'll listen in. So if anybody does have a question, for the next 15 minutes or so that does come up, that's investment management related, with respect to starting a firm, trading, really, if you want to trade money for anyone else's, whether it's friends, family, there are regulatory issues, and I'm happy to address those on this call. But look forward to having a more in-depth seminar on this topic in a week or two.
Well, Brent, one thing has come out of the last few years, and that is if there are regulations and you don't follow them, it's huge trouble. And that's why people need to speak with you to flush out what they're up against. And a lot of people don't realize sometimes they trigger things like you pointed out. So thanks so much for coming, Brent. People can find you on the Contact Us page of our website, on your website, which is accessed from our site, investmentlawgroup.com. Thanks, Brent.
Thanks. Bye.
Okay, so let's see now, everybody, if get your questions on the board, hands raised. And as we get to that, let's do some poll questions. So everyone listen up now. We're going to do some polls and see what's going on, where you stand. Let's launch the first poll. Have you filed your 2011 tax return yet? So get your answers up onto the poll. And let's see, you got 41%. Everyone try to just listen up now. It's a good interactive period. It's good for all of us to see where we stand. And we got 52% voting, 53. All right, I'll close the poll in just 3 seconds. Get your answer in there. Good. And let's share that. 36% of you filed, 64% no. That's great. A lot of you waited. You waited until we had more visibility. Now, if you were not trading securities and you had a simple futures 1099, things were clear, you were okay to file earlier. So that's good numbers. I'm glad to see it. Let's ask the next question. Do you have a trading entity? So yes, no, or you're interested in an entity. So let's get your answers in there. All right, so we have some good voting on this one. We'll close it. Oh, I'm sorry if I cut it off too fast. 24% have the entity. That's good. That's good. 47% no, almost half no. 30% are in, 29% are interested. I think a lot of you who are interested should really consider the entity because you get rid of the red flag factor of the Schedule C. You get rid of the 8949 hassle of the cost basis reporting. Entities don't file it. And you can then do the AGI deduction strategies for the retirement plan and health insurance. In some cases, you might get lower commissions, and you can probably still pay the same non-pro data feed fees, except for one broker who's a problem on that, Interactive Brokers. So the entity makes a lot of sense. Go back and take that free webinar we had, the best entities. Let's look at the next question. Did your broker send corrected 1099-Bs for securities? So get your answers in there. If you were trading securities, did you get corrections? So we're almost ready to close it. Get your answers in there. It's about half and half so far. Okay, we're going to close it. We'll share it. 44% got corrected 1099-Bs. That's a lot. And 56% no. That's odd. Some of you still may get corrected 1099-Bs. I would think you would. So be on the lookout for it. And if you get, what do you do if you get one after you file? Our footnote kind of set up that it doesn't matter. So I don't think you have to file an amended return, but you may want to send a letter. I'm going to think about that a little bit more and comment on it next time around. Another question. Are you still finding errors or differences on 1099-Bs? So get your answers in there. Are you still seeing errors and problems? So we'll close this one in just a few seconds. Get your answers in there. People are still voting nicely. Okay, we'll close it. Share. 31% are still finding errors and differences. 23% no. 46% are not sure. That's a lot of uncertainty. That's a lot of uncertainty. So you can see these numbers indicate that there's still a big problem all around. And just to get a feel, now some of the ones without problems may be trading futures and Forex here. So let's get an indication here. This question, what do you trade, is multiple choice. So you can just check off everything that you trade. And this probably colored some of the prior answers to the poll questions. So we're almost done with the poll questions, and then we're going back to your questions. So we'll close this poll question now. Actually, we're getting more answers in there. All right, now I'll close it, share it. 73% of you are trading securities, and that means you're dealing with this cost basis reporting problem. 38% of you are trading futures and 1256 contracts. Remember, this is multiple choice. You can be doing one or more of the above. 52% are trading options. That's a lot of options traders. That's a big growth area. 30% Forex. Now, we didn't necessarily promote this webinar today as Forex. We did mention Forex. That's about right. This is what I would expect. The securities number is pretty high, 73%. But again, many of you struggling with securities reporting may have attended, skewing the results. Last question, which kind of relates to what Brent just had, is, are you interested in an investment management business? Are you being approached by friends, family, others who want you to manage money for them, give investment advice? So if you think you're interested, answer this here. We've had some surveys on this. Thank you very much for replying. We have a great team, a great service lineup for investment management. It's a smaller area for us than trader tax because there's just so many traders, but it's a key area. And a lot of our clients like that we do it because they scale into it later on. Let's close this, show the results. 23% yes are interested in investment management businesses. 58% no, 18% maybe. That's what I would expect. That's pretty good. Almost 1/4 are interested, almost 1/5 maybe. And, almost 60% no. So that's pretty good numbers. So let's now move off of the polls. Oh, let me actually hide it. Go back to our website. And let's get to your questions. We have just about 2:30, so we'll go late and we'll get more of these questions in. And let me just find where they are. All right, so we're looking at the questions on the board. And you're welcome to raise your hand to have some more banter back and forth with me as well. Mervin, on the accounting program that you offer, the TradeLog, we'll let you use 2 or 3 brokers. Absolutely. Each broker, each account will have a separate data file, and TradeLog actually can look at all the accounts for a consolidated wash sale reporting analysis. No one broker can ever do that. That's why for the IRS, to push wash sale reporting on brokers is a false indicator, because wash sales have to be analyzed across your accounts, including your IRAs. So yes, that's why TradeLog's so good, and the program resides on your computer, and you can use it for all the data files you want, your entity, your individual, your joint accounts, your spouse. Someone asked questions about futures and he left. Thomas, we have other webinars where we just did futures. Go back about a month. We did one on futures in Section 1256 contracts. But today we talked about 8949 and Forex, not so much futures, as promised in the webinar subject line. Jamie, do you or have you dealt with the taxes of a Forex trader who's also an expat? Absolutely. When you're an expat, if you're a U.S. citizen, you're filing U.S. tax returns. You might want to get the foreign earned income exclusion. And if you set up a U.S. entity to trade, which sets up your adjusted gross income deductions for retirement plan and health insurance because it pays you a fee, earned income, you pay an even bigger fee to get the Section 911 foreign earned income exclusion on Form 2555. So that's a great strategy for offshore traders of any kind, including Forex. John T., if I elect MTM, can I get 60/40 tax advantage for futures? Yes, you elect Section 475 MTM on securities only, and you put that in bold highlights on the election. Securities only, not futures. Conrad, if the trading results differ more than a little from the 1099-B, what do I do for the discrepancy? You report the adjustment so they can reconcile to the 1099, and then you explain the adjustment in that footnote that we put up on the screen before. And here it is again. By the way, I keep referencing the guide, and the guide is here. You'll have access to this. This is a great guide with a lot of pages, all these different chapters and sections, and you just click on a section, you read all about entities and retirement plans, and it's really a good guide. And we can go back to the guides. We'll leave it there. Back to the questions. Santej, for what level of Forex investing account and Forex income do you recommend the creating of an entity? If you qualify for trader tax status, Santej, if you trade every day, all day, I think the entity is useful to have business deduction treatment for your expenses. But if you have very few expenses and Section 475 is not an election you consider on Forex, you can file the beneficial opt-out election on Forex, which I talk about in the blog today. That's a new blog article today, talks all about that. Then you don't need trader tax status for that election on Forex. And if you have all the Forex tools from the broker and very few expenses and you have a job, you don't have to hunt down trader tax status and you don't need an entity. So it's not for everyone. Frenchie, what is the average number of trades should you make to be considered a trader? We're looking for 500 round trip on an annualized basis. Could be less, but your continuous business activity must be strong. A lot of people consult me about that to determine if they qualify, and it's as much an art as a science. You need very good judgment from an ethical person who's highly experienced and trained. That's me. Don't make the wrong decision with someone who doesn't really know what they're talking about. Understand the challenges. Understand if the IRS in your jurisdiction could challenge you and on what pretext and what situation, what's at stake. There's a lot to it to measure, the pros, the cons, using the entity to make it look more solid. Boris, the new healthcare law has a special mention of S-Corp. How can either an individual trader or a group of trader members of an LLC take advantage of special treatment, minimize the Medicare tax? Well, Medicare taxes are part of self-employment taxes. They apply to date on earned income. Trading gains are not earned income. They've been exempt. When we've paid fees to trigger AGI deductions, yes, there was self-employment tax, but the income tax savings put a couple of $1,000s in your pocket, net. Starting in 2013, the healthcare reform law kicks in. And for people making over $250,000, investment income is subject to Medicare tax, not Social Security, but Medicare tax. That includes trading gains. Now, when you trade or conduct any activity in an S Corp, earned income does not flow through to the bottom line, but the IRS looks for reasonable compensation. We cover that fully in chapter 14 of our guide. So it may be that those traders who trade in LLCs may want to file an S Corp election. There are other challenges with S Corps, and Congress has tried to close that loophole, but the Republicans filibustered it. Known as, we used to call it the John Edwards loophole. And a lot of tech companies and others use the S Corp to reduce SE tax by 75%. Investment managers do too. And we have filed the S Corp election on many of our clients for that reason. Yes, Judy, you can elect MTM for January 1st next year. You'll elect it by April 15th, but it will be retroactive to January 1st. Glenn, what is the procedure to use your firm for 012 tax returns and advice? Just sign up for a consultation with me to get acquainted, start getting advice, or just sign up for tax prep and planning, our $750 retainer for traders, $650 for investors. You're assigned a CPA, and then you start on year-end tax planning, which might be significant this year. If the Bush-era tax cuts expire, tax rates can jump up. People may want to accelerate income. Conversely, if they don't expire, why accelerate income? You want to accelerate expenses. And if they do tax reform and lower the rates and broaden the base, that's a tax rate reduction. And you want to rush your itemized deductions into this year because you may not get any benefit next year. It's very tricky this year. And you have to have a crystal ball. Now, they're not going to decide these issues before the election, in my view, because the election, when Mitt Romney chose Paul Ryan, the pundits said it turned the election into a referendum on fiscal policy. So why would they settle the fiscal policy before the election if it's a referendum on the fiscal policy? So I doubt that issues will be decided in the lame duck either. They have to save it to the next Congress. It's too important. The lame duck will probably punt the Bush-era tax cuts a few more months to give the next Congress some time, because it would be just lunacy to change the tax code for 2 months. So we're all going to be held. You're going to see who wins the election. If the Dems have a clean sweep, you can kind of count on things going one way. If the Republicans do, you can count on it going another way. If there's gridlock, which probably be the case, it's going to be hard to decide it. So I'm going to keep my powder dry until then. I'm not going to write blogs about this and that. I don't want to jump into the political fray. Our clients don't want that. We have Democrat clients, we have Republican clients, and I respect everybody equally. So it's going to be a cliffhanger, a fiscal cliffhanger. Bob, TradeStation still does not. Okay, we went over that. I think we got a lot of questions here. I'm not sure who's still on the call. It's running late now. It's already 2:40. Let's look back at some of the last questions. Those people are still here. What about an LLC as a partnership? Yeah, there's no payroll taxes. We do admin fees. You still get all your 60/40 benefits, Raphael. If you've not traded in a day because you don't want to over leverage, that's fine. Douglas, do you know how the Medicare tax? Well, we'll go over that a little bit more in a separate session on how it will apply in the S Corps. I didn't really cover that today. That's a separate topic. I don't want to rush that through. It's a little bit more in depth than what I was talking about. Do you put K1 trades on your personal 8949? No. K1s go on to Schedule E and they pass through items to separate areas. Yes, it might. Some of that ends up on Schedule D, yes. And some may end up on 8949. Have capital losses accumulated so far? Those will still carry over. I'm just rushing through questions here. I think we got most of them. Have a job? Yeah, you can still trade. I think I got most of the questions. One second. C Corp manages trades for a limited partnership. I don't like that. The C Corp might be the money manager. The partnership could lose trader tax status. It's better to just pay an admin fee. And I really don't like the C Corp involved. And we've written a lot about that. It's in the guides on the chapter on entities. Totally different subject. Well, that's a little, let's get back to this spot Forex. Those currency baskets are probably just regular Forex. That's DW. That GFT spot Forex pair basket might just be a lot of Forex, but it's still Forex. And it's still probably just spot. So I don't really see how it would be a differing factor, but it could be. And maybe DF, we want to get that into Mark Feldman, our tax attorney, not just give it a cursory answer. I think I got all the questions in here now. If anyone wanted to speak up, your last chance to raise your hand. But thank you all for coming. And here's what we're going to do now. William, I unlocked your mic if you want to speak up. So anyone with a mic, you're welcome to speak up. I am unlocking the mic for people who raise their hands.
And then you can get back to me. I spoke to Joe. We said you can have it for now.
I'm gonna mute all because actually we had some background noise. So let's wrap up here now. Here's the order of business. If you don't have TradeLog and you traded securities, you just got to get it and use that footnote. Get the guide package that has the footnote, example returns, and more. You need our TradeLog accounting help? Get it fast before it's too late. You want to consult with me? Consult with me. My time, I'm available. I'm doing consultations all day, every day. Mindy will get you in with me. It's on promotion right now. She'll get you in with me right away within a day or two usually. You can email me some questions. I'll make notes. You can even record it. Get with me. It's a good time to set up an entity, mark to market. Otherwise, we can do the entity now. That's on promotion too. So you sign up on the website. All the services are over there. You got an IRS problem, we'll deal with it. We'll probably try to put it off until after October 15th. Interested in investment management? That's a whole area. We have different people assigned there. They're not tied down with all the taxes. They're ready to help you right away. Want some more content? Go to our webinar page. Listen, download all these webinars. The one today will be up there in an hour or so. Taxes for options traders, cost basis reporting, tax benefits for futures, best entities, FBAR, it's all there, and tons more. Tons of stuff there. Go to the blog. Read those blogs. The one just went up today on Forex. Then when you're ready, just contact customer support, speak to Mindy. She'll tell you how we can help you. She's extremely knowledgeable. So thank you, everyone, for coming. We may not have a lot of webinars going into the deadline. So when we have them, come. Spread the word. If you want us to do a webinar for a group, your own brokerage firm, your trading group, let us know. Thank you all for coming. Please fill out the surveys when you leave. And good luck trading. Good luck with your taxes. And thanks for coming today.